All right, let's see what investors should watch out for this week. That's in the global economy for Monday. The ISM Manufacturing Index, that's expected to show that activity expanded in July in the U.S., with the headline rate reading rising to about 54 from 53.3 points. The prices paid index is forecast to decline to 70 from 73.0, while the new orders index is expected to improve to 57 from 56. That's in the U.S. Now we've seen earnings rolling out also in the U.S. This week. Spotify takes center stage today as the music streaming giant prepares to release its latest earnings before the opening bell. Investors will be watching closely to see whether recent price increase and strong subscriber growth could continue to drive revenue and profitability. That we have it there. The latest earnings. We also see SpaceX too. They're set to host a question and answer at Spotify shortly after the results are released. After the closing bell, attention shifts to SpaceX as the company is expected to release its latest financial results, followed by a live audio webcast with management. Investors and industry watchers will be listening for the updates on launch activity, Starlink's growth, and the company's outlook for the rapidly expanding commercial space sector. Also, we see this week, Wall Street would also be watching Eli Lilly as the pharmaceutical giant reports earnings and holds a conference call. That's later today. Investors will be looking for fresh guidance on blockbuster weight loss drug sales after the company raised its outlook. That was last quarter. The results could also set the tone ahead for rival Novo Nordisk earnings later this week. Then we see investors will also be watching latest U.S. initial jobless claims, one of the first major economic indicators released each week. The data offers an early snapshot of labor market conditions that could influence expectations, for Federal Reserve interest rate decisions if claims come in significantly above or below forecast. Then for Friday, employment reports is expected to show non-farm payrolls rose by 91,000, up from 57,000 in June. Meanwhile, the unemployment rate is expected to edge higher to 4.3% from 4.2%, while average hourly earnings are forecast to remain unchanged at 0.3% month on month. A stronger than expected employment report could reinforce expectations that the Federal Reserve will raise interest rates before the end of the year, which may weigh on risk assets, and we know risk assets are very sensitive there. But let's get the latest in the UK now. Joining me is Simon Pusey, and talking about the latest, EY, one of the largest multinational professional services networks, they've kicked off the week with a warning that the UK could fall into recession next year if the Strait of Hormuz remains closed. Let's hear from Simon now. Good morning, Simon.
Good morning. Yes, exactly. As you say, the Strait of Hormuz does remain pretty much closed. I'm not actually in the Strait of Hormuz at the moment. I'm on the Irish Sea, just off the coast of an island called but as you say, the Strait of Hormuz is a problem, and Ernst & Young, the consultancy giant, are warning that the UK could fall into recession next year if the Strait remains closed, two positive growth and rising unemployment and falling consumer spending. But if the Strait reopens by the end of the third quarter of this year, EY's forecast suggests growth will remain fairly resilient at 0.9% in 2026 and 1.2% in 2027. It's hard to predict or plan, of course, what's going to happen as Donald Trump and his administration and the Iranians are flip-flopping so much, and there's so much uncertainty that continues.
Yeah, we're getting used to that uncertainty at this point, and at some point, maybe we can visit the Strait of Hormuz, Simon. But it's a new trading week, and it's a new month. Actually, what should investors watch out for this week in the UK?
Yeah, well, they've remained at 3.75% by the Bank of England, the interest rates, which are on hold. Inflation is the main worry this week. The consumer price index was up 2.6% in June. That's above the 2% target. The main scheduled data release for the UK this week is July's PMI surveys. That's services, manufacturing and construction. That will tell us about the potential for growth. Oil prices have fallen back today, with the international benchmark Brent crude now down around 5%. That's generally good news for inflation. But it's also important to look at any announcements this week by the new Chancellor, that's John Healey, which could impact the markets. The appointment of Healey as Chancellor is fascinating, with some senior figures in government saying that Burnham and Healey share the same economic outlook and ambitions built on a desire for reindustrialization and devolution. So it'll be interesting to see what Andy Burnham and John Healey say this week in terms of any economic announcements that will obviously impact the markets.
All right, thank you so much, Simon. I see you're on the move right there, just like this week. Thank you, Simon.
Thank you very much.
All right, now to the U.S. President Trump has announced the cancellation of a planned military strike on Iran, signaling a potential shift towards imminent negotiations regarding the Strait of Hormuz. Energy markets are reacting as traders weigh the potential for a drop in oil's risk premium following the news that talks may begin. And we see China's private manufacturing sector remained in expansion for an 8th straight month in July, but growth lost momentum as factory activity slowed to a 4-month low. The Private Purchasing Managers Index, or PMI, slipped to 50.9 points from 51.7 in June, staying above the 50-point mark that separates expansion from contraction. The weaker reading points to softer domestic demand and a moderation in production, even as exports or orders showed signs of improvement. The latest data adds to concerns that China's economic recovery remains uneven and could weigh on global trade and commodity demand. And Alibaba shares climbed after the Chinese technology giant unveiled Qwen 3.8 Max, the latest version of its flagship artificial intelligence model, as competition in the global AI race intensifies. The company says the new model delivers stronger reasoning, coding, agent capabilities, and multimodal performance while reducing computing costs. The launch comes just weeks after rival Moonshot AI introduced its Kimi K3 model, underscoring the rapid pace of AI innovation in China. Investors welcomed the announcement, sending Alibaba's Hong Kong-listed shares up around 6% in early trading. Looking at digital assets now, Bitcoin slipped below $63,000 at the start of the week as investor sentiment that took another hit following a major security breach involving cold card hardware wallets. Nearly $90 million worth of Bitcoin was reportedly stolen after hackers exploited the vulnerability in the devices, raising fresh concerns over crypto security. The decline was compounded by weaker than expected earnings from crypto firms Strategy and Coinbase, while optimism over renewed US-Iran talks did little to lift the market. The broader cryptocurrency market also traded lower, with Ethereum, XRP, and Solana posting losses. And to the currency markets now, we see the British pound edged lower against the US dollar today as the greenback remained resilient despite a rare joint currency intervention by the United States and Japan to support the yen. Sterling slipped to around $134, while the euro also weakened as investors continue to favor the dollar amid the expectations of tighter US monetary policy. And that's what's hot in the global economy. It's back to Annie with the rest.